So let's talk about this. Taking losses. What is taking a loss? A loss is obviously when you don't win money. Now, in trading, especially here at Finance and Chocolate, we talk about systematic trading. We talk about trading a system that is back tested and potentially forward tested and has a proven statistical edge over the markets. So, what we mean by this is we don't just go out there and just take a trade whenever time we feel like it or for every little thing that we feel like. We make sure that if we're taking certain setups, these setups have been back tested and have been proven to make money over the long term. So, what I mean by this is no strategy is going to be 100% accurate. It's just not possible. Anybody who tells you they have a strategy that is 100% accurate is full of shit. That's just the honest truth. We will take losses in trading, but I like to consider them expenses, and I talk about calling them expenses and not necessarily losses. And the reason is because when you're trading, you are running a business, okay? And just like every other business out there, I don't care if it's Walmart, Google, Apple, Netflix, Sony, Samsung, every single business has expenses. Is this or is this not true? It is very true. Now, these businesses, they don't go around thinking that they can make 100% profit margin and not have any expenses, right? In our trading, we have to understand it's the same way. A business has labor expenses, has executive pay, has stock options, has all these different things that it has to expense or has to pay, depreciation, all these different things, right? Advertising. There's tons and tons of things that a business has to pay out. Now, some businesses have 10% profit margins. Some businesses have 50% profit margins. But every single business has expenses. So in our trading, especially for the new traders out there, you can't go into your trading thinking that, well, I figured it out. I have a business that is not going to cost me any money. It's just going to print money for me. Now, that is the wrong way to think about it, because you, in a sense, are running your own business when you start trading. You, in a sense, are generating money, and your expenses are going to be in time and in money. So it takes time to learn how to trade. It also takes time to trade. In money, it takes money to buy a trading system. It takes money to trade commissions, right? It also takes money when it comes to spread or slippage, right? But another major expense that traders tend to not figure out is the expense of losses, right? Our trading strategy is not always going to be accurate. Now, what I suggest doing is at the end of the year, just like every business, you should take your profits. So the total gross amount of money that you made, gross revenue in your trading, and you'd put that, then you'd subtract any expenses. So did you buy a new setup? Did you buy a new trading platform? Did you buy or did you subscribe to a new software that better enhances your trading? That would go under expenses. And then right under that, there would be trading expenses. These are losses, right? And they're a very real and very normal part of trading success. So now let's deal with how do we actually deal with them on day-to-day life? How do we actually overcome them? Because a lot of times when we're trading, it doesn't feel good to take a loss. It doesn't feel good to enter a trade and get stopped out. Now, in systematic trading, I've over the years been able to develop the ability to literally not give a fuck. Okay? And the reason is because I have back tested my strategy. The reason is because over the last year, my strategy works. Over the last 5 years, my strategy works. Some people back test their strategies 10 years, 20 years. I don't really care if you do or not. The point is you need to back test your strategy some. Of course, the more you back test it, obviously the more accurate your results are going to be. But here's the thing. When it comes to actually dealing with it, and this is why so many trading firms are going towards robotic trading, because robots don't give a fuck. But you don't have that luxury, neither do I. So what we have to do is we have to almost become robotic in our trades. Today I woke up to not a loss, but a drawdown of profits. So for those of you who have been following me on the Instagram, you know that I entered, or maybe not, I don't know if I put it, but for everybody on the trading chat and on the trading team, you know that I entered Baba long, BABA long, Alibaba, at 192-ish. Okay, and we had a nice run all the way to 200, all the way to 205, I think all the way to 206. Now, I woke up today and Baba was trading at like 197, 196. Okay, so I was still in profits, absolutely still in profits. But that drawdown was unexpected. It was because of an earnings release and an acquiring of a company. So the market didn't take that well. They missed earnings by a couple of cents. Now, over the course of the day, that loss from 197 went all the way back to 192. I think we closed at 191.90, something like that. Now, here's the thing. That puts me at break even. Okay, so my entire profits on Alibaba, and it was good profits, okay, $15, $16 a share, wiped in one single day. Now, I'm going to talk about taking losses and losing money, because in this case, I broke my rules. And when I break my rules, I've noticed anytime I take big losses, it's because I broke my rules. It's because I started trading differently than what my rules said for me to trade. Now, it was a little bit of both. It was unforeseen, but I also broke my rules. So let's talk about breaking your rules second. Let's talk about the loss first. The loss was unforeseen. Okay, and I woke up this morning. Okay, I woke up, checked my phone at like 7 a.m. I'm in California. Markets open at 6:30. I'm mostly a swing trader, so I'm not up at 6:30 unless I'm day trading. So I woke up, checked my phone. I saw the loss. Okay, now here's the difference between a new trader and somebody who's been experienced. I literally saw that loss and I said, cool, and I went back to bed. I wanted to sleep a couple more hours. That loss is part of trading. You will have losing trades. You will have trades that run, and then turn around and go against you. It is part of trading. And over the last 7 years, I've learned to literally not give a fuck. And so many new traders don't know how to do this. You need to master being stoic. You need to master being unemotional. Just like a robot, just like a high-frequency trading machine that does not give a shit. It doesn't care if it loses or makes money on each individual trade. It cares about the overall picture of profitability. It cares about how much it can return over 1 month, over 6 months, or over a year. You as a trader have to be the same way. It is impossible for you to predict every single outcome of every single trade. It's just not possible. And we don't need to, luckily, to make money. Okay, so when it comes to trades going against you, you set your stop losses, you set your take profits, and you call it a day. One of two things is going to happen. You are going to get stopped out, or you're going to take a profit. And all the stuff that I talk about, right? All the stuff that I talk about in the course, and all the stuff that I talk about in the live videos, all that matters, right? All that. As long as you're following those things, you should make money over the long term. As long as you're following, as long as you know your trading statistics, your win-to-loss ratios, your average stop-loss amount, your average profit amount, all those things matter, because then you can start to plan how much you need to make per trade. You need to know your accuracy. As long as you know all those things, each individual trade does not matter, literally at all. Okay? Each individual trade, think of it as a grain of sand in the giant bucket of your trading. Over the course of a year, you might take 100 trades if you're a swing trader. You might take 1,000 trades if you are a day trader. Okay, that's one individual piece. It's 1% or 1/10 of 1% or even 1/1000th of 1% if you're a very active trader over the whole overall picture. It does not matter. Each individual trade does not matter. What matters is, at the end of the day, is that bucket full of money or full of losses? And you can get to a bucket full of money with a 10% accurate strategy. I don't recommend it, but you can. You can get to a bucket full of money with a 20-30% accurate strategy. Okay? If you've never heard of Richard Dennis and the Turtle Traders, look them up. Okay? But you can also get to profitability with 70-80% accurate strategies. It doesn't matter. Accuracy by itself does not matter. So when it comes to taking a loss, okay, something very normal and it's a normal part of trading. You must learn to not care. You must be able to wake up in the morning and see that loss and not care. Okay? There are ways around this. Diversification for one. Like I currently have 9 active. After today, I have 7 active open positions. Before today, I had 9. Okay? I took some profits on a couple of them. Diversification helps. But at the end of the day, nothing is going to take away from your pain of seeing your account go down besides your ability to control your emotions. So a very real part of trading and a very important part of trading is understanding that you are human and understanding that you have emotions and then figuring out ways to control them. Okay? For me, it's just pure, I was just blessed with the ability to, when it comes to my trades, I have the ability to be heartless. I don't care about each individual trade. I really don't. They win or they lose, it doesn't matter, because I realize in my head that the overall picture of profitability is what's important. 10 trades, 50 trades, 100 trades. That's what matters. So one trade, who the hell cares if it goes up or down? Who the hell cares if it goes against you? What matters is overall profitability. We've had a very, very, very good week. Yesterday was one of the greenest days of 2018 trading. YPF short, excellent. AUI short, excellent. BABA at the time, very, very green. So I had been doing very, very good. You're bound to take a loss, right? That's just normal. So when you take that loss, you have to have the ability to not care. That's step one. Okay, now let's talk about losing money, because there's a difference between taking a loss and losing money. Losing money is where you lose money for an unnecessary reason. Okay, you lose money because you made a stupid mistake, but as long as you learn from it, that mistake becomes profitable in the long run, actually. So let's talk about my mistake today. And see, mistakes happen to everybody. I've literally been doing this for 7 years. I am still growing as a trader. And I could be doing this for 30 years. I will still grow as a trader. Because if you stop growing, if you can't ever admit that you were wrong, you have no place in this business. You have to be able to admit that you're wrong, that what you're doing is wrong, and you must be able to change that. So how did I break my rules today? Well, I broke them yesterday. So Alibaba got in at 190, 92, something like that, 192-ish. We had a run all the way to 200. We got over 200 relatively easily. 201, 202, 203. My take profits were at 205, almost the top. I could have almost been one of those people who brags about calling the top, right? But I knew that earnings was today. And I was expecting good earnings. Alibaba's been doing great. It's been on an uptrend all year long. I was expecting earnings. So I did not exit my trade yesterday. Okay? 205 came and went. And I said, we'll probably go to 210. I did not exit my trade. I didn't even scale out. Which is another concept I talk about on here that I use all the time. So I broke my rules. My rules said, get out. Get out at 205. I didn't. Why did I say 205? That's for a different lesson. But whole number support and resistance is a big thing that I think is very valid here. So I didn't. I let it go a little higher. Said, we're good to go. I didn't even move stops to below 205. What the hell? If I at least would have moved stops to 205, we gapped down, so I still would have been at a loss. Well, not a loss, but less profit than what I had at 205. But I didn't even move stops, so I completely broke my rules. Okay, I have zero excuses. And here's the next thing when it comes to trading: you must hold yourself accountable. I have zero excuses for breaking my rules. I fucked up, and I suffered losing money because of it. It wasn't taking a loss at this point. Taking a loss would have been I put my take profits always underneath support and resistance, or excuse me, underneath resistance. So my take profits should have been at like 204.80, 204.70. Okay, a good trade would have been I put my take profits there, and I got out for a profit. I would have moved my stop losses under 200, taken profit at 205. That would have followed my rules. At this point, let's say that instead at 203 we reversed all the way down. I would have still been broken even right now, but that would have been considered a good trade, because I always talk about this. You can lose money on a good trade, and you can make money on a shitty trade. Okay? I don't care if you make 100% return on a trade. If you broke every single rule that you have, that's a shit trade, and it's going to blow up your account eventually. I don't care if you lost 100% return on an individual stock. If you followed every single rule and it gapped down and it blew your stops, that's a good trade. You have no control over that. I had control over this individual instance. I had control over what happened. But instead of following my rules, I said, earnings is coming. It's going to be good. We're going to get a move up higher. I'm going to gain more profit. That is breaking my rules. If I wanted to do that, fine. I should have scaled out. But I broke every single rule in my book. And I lost money because of it. I didn't take a loss. I lost money. Okay? So that's the difference between taking losses and losing money. One of them, part of trading. One of them is taking losses. That happens all the time. I take losses all damn day long. It doesn't matter as long as my overall strategy is profitable. I take and nobody talks about this. Everybody wants to seem like a rock star. I fucking take losses all day long. Okay, but I keep my losses small. I keep my losses $100, $200, $300. When I get winners that are 1,000, clears my losses. When I get winners that are 5,000, clears a ton of my losses, and I'm back in profit. That's the name of the game. Lose a little bit, make a lot. Okay, your equity curve is never going to look like this ever. It is going to look like this, and that's okay. But when instead I lose money because I broke my rules, that means there needs to be something that is fixed. That means that there needs to be something that I need to adjust. Okay? That means that I let emotions get the best of me. I'm very, very, very adamant to stick to statistical based trading and systematic trading. That means make a strategy, prove that the strategy works, and follow the strategy. That's what I'm here. That's how I've built my trading career, and that's how I plan on continuing to do it. But because I broke my rules, I let emotions get the best of me. And when you let emotions get the best of you, the market will eat you alive. So luckily, it's a break-even trade right now. Could have been much worse. We could have gapped down to 180, 170. Who knows? There is no way to know. There is no way to know. It gapped down $15. What would have stopped it from going $20, $25 down? See, nobody knows. And the moment you think you know, that's for another lesson. But nobody knows what's going to happen in the market. Nobody. You don't need to, but nobody knows. So what I'm trying to say here is, for all the new traders out there, understand that mistakes are part of trading. As long as you learn from them and improve, they're gonna happen. Mistakes are going to happen. I just made one today, and I've been doing this for a lot longer than most people. Mistakes still happen. If I learn from this mistake and I remember this mistake, and if I write it down in my journal, my trading journal, I highly stress having a trading journal. If I learn from this, then over the long term, this will actually be profitable. This mistake will actually be profitable because it'll save me money in the long run. But if I don't learn from it, if I keep being emotional, like a lot of new traders are, then you lose money. So that's number one. If you're a new trader, cut your emotions out. If you're a veteran trader, 2, 3, 4 years, like me, 7 years, more. Some people have been trading 10, 15, 20 years. If you're a veteran trader and you're going through a slump, you need to find out in your brain, are you going through a normal drawdown? Because I went through a normal drawdown last year, 2017, September, terrible month. But I was doing everything right. I was taking trades how I was supposed to. I was following my strategy, but I was having a terrible month. That, guess what? I was trading good then. That's not losing money. That's taking losses repeatedly. That's okay. It's part of trading. So what you need to do in your mind, if you're going through a slump right now, you need to figure out, is it A, because my strategy is working properly and I'm just taking normal losses? Or is it B, because something's broken? Most likely operator error, right? We have to look internally. Is there something broken? Am I being too emotional? Am I breaking my rules? Am I jumping from strategy to strategy? That's a problem on your part, and you need to fix that. So for the new traders out there, for the expert traders out there, whether you're having a good year or a bad year, whether you're having a good month or a bad month, understand that trading, taking losses, part of life. Losing money, not a part of trading that you want. You want to eliminate losing money as much as you possibly can. There are good traders who have had 10, 15-year careers with years, sometimes a year, where they come out at break even or a loss. Doesn't mean they didn't trade good. It depends on their strategy. Are they following it or not? A good example is people in real estate. I was talking to my business partner the other day, and he was talking about how one of the people he knows had this guy makes $200,000-$300,000 a year easily. But a couple years ago, was it last year? Last year or a couple years ago, he had a $40,000 year. So he went from making $300,000+ to $40,000. That's a pretty shitty year. I'm not saying that $40,000 is bad, but when you're going from $300,000 to $400,000 down to $40,000, that's a 90% drop, okay? Or that's a 10x drop or 10 divided drop. So basically, but for him, he didn't do anything wrong. It's not that he was lazy. It's not that he slacked off. It's not that he didn't make enough calls. He said he ran the numbers, but with the numbers that he did, he should have made $200,000+. It was just a bad year. That's okay. You can run your statistics. You're still gonna have bad years. That's how I would compare trading to something like that. So if you're having a bad year, bad month, if it's just your strategy and you're following your strategy and you're doing everything right, you got to suffer through the drawdown. Be unemotional. Go out, drink some tea. Whatever you want to do. Go out and eat. Go out and hang out. Ignore that. Understand that we're after long-term profitability. Now, if there's something wrong with your internals, you need to fix that. So That's my lesson today. My lesson is on learning how to deal with taking losses and knowing the difference between taking losses and losing money, because it's a very, very important difference. And I think a lot of new traders see them as one and the same thing. A lot of new traders see taking losses and losing money as the same damn thing. They're not. They're not the same thing. Okay? And the reason why a lot of traders stop trading is because their strategy spits out 5 or 6 losses in a row and they move to something else. No, that strategy doesn't work. I'm going somewhere else. It's not that it doesn't fucking work. It's that you didn't trade it long enough. The strategy could be very, very, very profitable. It still might spit out 7 losses in a row. If you can't deal with that, you should not be trading. That's the honest truth. Okay? Now, if you're being emotional and jumping from one thing to another and breaking your rules and revenge trading, that's a big thing. Don't revenge trade. You're trying to get back at the market for the losses that you took. You're all over the fucking place. You're over trading. You're opening 5, 10 day trading positions a day, just all over the place. That's not your strategy's fault. That's your fault. That is losing money. So you need to be able to know the difference, especially as a new trader. Know the difference.